Welcome everyone to a new episode for Traders Talk. And today we have another interesting guest with us. So it's Mr. Yuvraj. He is Managing Director for BP Wealth, a well-known broking house. I'm pretty sure everyone knows about it. And he's also a Managing Director for Fort Capital, which is one of the India's leading asset management firm. So Yuvraj, first of all, thank you so much for joining in. I know you are a hard man to catch, and it's been an honor you are here for the audience, and you would like to, we'd like to ask some questions to you, and the audience would really benefit from your knowledge and your journey about the trading. So let's start, Yuvraj. First of all, we warm-heartedly welcome you. Please tell us about your background, how you joined the trading journey, what interested you in trading career, and how did you choose the path? Being managing director for such a huge broking house in India is a challenge in itself. So please shed some light for that.
Hi, thank you, Suraj. First and foremost, thank you so very much for having me here. It is a pleasure, as always, to interact with you and with the added bonus of speaking to your wonderful audience. I hope they get some value out of this conversation that you and I have. Um, you asked me a question, how did I get into it? So, to be very, very honest, I wasn't given a choice. BP is a family-driven organization. It's a family business. So I pretty much always knew that I was going to be, and we also predominantly engage in both prop trading as well as retail broking. So these two being the largest divisions in the organization. When I joined, the very first task given to me way back in 2011 by management was to make the prop desks more systematic, more algorithmic driven, and more profitable. So, in a nutshell, that is my history since 2011. That's what I've been doing. Obviously, trying to make de-risk strategies, de-risk the entire business, and add a layer of automation to it all, whether it is in execution, whether it is in strategy building, whether it is in prototyping and backtesting. So that has been predominantly my focus for the last decade.
Super. So, being into prop trading, I'm pretty sure you are well acquainted with the systems and how algorithms work, and predominantly you majorly use those systems in your benefit. So, here we at AlgoBulls, we are trying to democratize those sophisticated solutions for retail masses. So, for years, there has been like prop trading, prestigious prop trading firms like yourself are using such machines in the benefit for execution or the accuracies. So how do you suggest a machine is more likely benefited by a user rather than doing it manually? Because I am pretty sure you are using sophisticated tools or high end machines at your end, which are actually being in benefit for your prop trading. I'm pretty sure that it's doing very well. We have met and I have seen the results myself, so I know how well it is doing, and it's one of the India's leading asset management firm. So how would you suggest, like, how this technology has brought some change and that has impacted your trading journey at Fort Capital?
And BP Wealth. So, right off the bat, I would like to say that all of these machines and all of these automated high frequency servers and connections and all of that is only as smart as the user. Uh, the the value that you get out of a algorithmic platform is the value that you put in, right? So there is no substitute for hard work. There is no substitute for having a good strategy and being well thought out, right? So right off the bat, I want to ensure. So because this is a very common misconception, right? Okay, this is a black box. It's a magic box that just throws out returns. While I wish that was true, it isn't so. The best way to understand what benefits an algorithm gives you, or automated trading or high frequency or high end servers or co-location, is that it makes your strategies and you more competitive. Um, Obviously, the better your strategy is, the more returns that you earn. But now it has come to a point where if you are a systematic trader and you are still not some sort of automation or some sort of algorithm, um, you're a dinosaur. Um, the largest benefits that you get out of a algo platform is uh, the elimination of human bias, right? Uh, Regardless of however much experience you have or however good you are at trading, human bias always comes into the question. Now, and when human bias comes in, you're violating your strategy. So that is one of the largest ways going algo has benefited us. Secondly, if one human being can manage 2, 3, 5, 10 counters, an algorithm can manage 6,000. So that definitely gives us the benefit of being able to do more. Um, we deploy algorithms in two flavors. One of them is as an execution tool, and one of them is as a fully contained end-to-end money maker, right? So we have found far more benefit in using it as an execution tool because it allows our traders and our jobbers to get better prices, to get better spreads, to do things that they could not do previously, and squeeze out that little bit more alpha from every trade.
So summarizing your point in a purview which I can understand is to gain better prices in the market and emotionless trading. That's something similar to what we market in the this our uh, business. And because of emotions, we have also seen that many traders or many newbies are coming and they are uh, shedding over their capital, and they are not able to generate that alpha what they are looking for the traders. Beginners luck is quite common, and in the start they would start earning, but they would feel that the strategy is not working. They keep on changing the strategy. That's all because of emotion. So I think big fund houses like yours, you all have sufficient tools or mechanism wherein you all can actually manage the capital or manage the trading counters and actually put in a huge amount of money in such IT infrastructure what you all require. So what would you suggest for a retailer who is trying to get into algos, or what is your take on retail algos? So because such platforms like ours are coming into the market who are trying to democratize algorithmic trading for retail masses. So what's your take on the same?
So I think it's a wonderful, wonderful product that you have. Uh, Definitely, this is an entire toolkit that was previously unavailable to smaller sized retail traders. The big boys have it all, right? They have the money to burn, right? But on the infrastructure and the servers and the software and having everything made for them bespoke. But I think it is a wonderful offering that you have put together, and definitely this will make the markets a bit more efficient, and it'll arm the smaller retail investors with similar tools to which they were to what the larger players use. So it is definitely a step in the right direction. Uh, is long, and to a large extent, even while having the tools, it requires a bit of a lot of discipline
Okay.
and a lot of analysis to be profitable. But at least this democratizes the unfair advantages that the larger firms have.
Correct. So yeah, we have the same opinion. We actually have the same vision. What you all have for Ford Capital is democratizing the technology for retail masses. So that's what the strong belief we stand upon, and we are trying to do the same. So thanks for your views, Yuvraj. So let's move on to the strategies. So many people come to the platform our platform, and we have 150 plus strategies listed on the platform, and they try to select the best one for them. So we have different strategies. So what's your style, Yuvraj? So let us shed some light on that, wherein what's your, everyone has some trading style, right, in the prop desk, or maybe your personal trading style. Everyone will like to know that. That's something like a secret sauce which people would like to
Not
know
at all.
about.
Not at all. So one thing is, Suraj, I'll tell you with absolute certainty, the pie is too large for any one person to eat. The more participants there are, the larger our markets get, the more liquid our markets get, and the more fun all the participants have in it. So yes, while there is a lot that is proprietary and secretive in nature, I'm more than happy to share information. So um, the if I'm to distill the reason for my success in one word, is diversification. Even on my prop desk, uh, we have several prop desks doing several different strategies. Some people do mid cap trading, some people do derivatives trading, some people are stock derivatives, some people are options derivatives. So definitely having a diversification in terms of strategies has helped my firm a lot. Uh, Personally, I'm more of a value player. I know that's not what you want to hear right now, but I have a love for technology, a deep love for technology. But uh, I have realized one thing, that I'm a horrible trader. Right? If I sit in front of a screen and I trade, I lose money. So I've identified my weaknesses and I use software to compensate for that. Uh, I use so. Uh, Let me give you an example. Uh, let's say, for example, uh, uh, if I want to buy the top five liquid counters on the markets today, with a view to sell them at 325, what I would do is, and get become biased, I would probably put in a TWAP strategy, or I would put in a slicer. That is the way I would use an algorithm to my benefit. Another way I use algorithms in my personal trading is the quantitative strategies that we've built, uh, which is a fancy way of saying technical and statistical strategies. I'm trying to use as little jargon as I can. Um, those are leveraged. Those are executed using algorithms to completely remove any human bias out of them. But when I say diversification, I we have the firm has worked very tirelessly and very hard to give top-notch execution algorithms to almost every type of trader, right? Whether that is a arbitrager, whether that is a uh, options neutral type of trader on the index or on stocks. Everyone, spread traders for arbitrage, calendar spreads, or option spreads. Uh, everyone needs high, everyone needs powerful tools, and we have provided those powerful tools to everyone to ensure that they are more profitable.
So basically, not a single strategy, but diversification is the rule. You can't rely on a single strategy in some such
No, you
markets.
cannot. No, you
And
cannot.
correct. So, if I may say that whenever you are trading in long term, you have to diversify your capital, wherein you are parking your money as per your risk appetite. So basically,
Yes.
you have a X amount of fund, which is a risky fund. You may park it to an option buying strategy, or
Option
you have
selling.
some fund
The
wherein
high risk goes to option selling.
oh, yeah, correct. High risk goes to option selling. But yeah, that's the normal terminology what people understand. But I also believe that option buying has very high risk because it's always zero and hero over there, right? So, so you don't know,
But
like, you
option selling, so it's so at least in buying you can go zero to hero or hero to zero. In option selling,
correct,
you can go negative than zero also.
correct,
So
correct.
option
That
selling is very. It is safer to cross a road without looking on both sides rather than sell options for someone who does not understand it.
correct. No, I completely agree on that part. But actually, why I was pretty confident because of the tools what we are using currently. We have some tools for PNL tracker, wherein we track the M2Ms of the option seller, the strategies which are not hedged or maybe which even are hedged. The M2Ms are tracked on every frequent timely basis, and wherein the systems take the exit. So I am much acquainted to it, wherein I don't feel it risky because the system are taking care even if I am
Oh,
not there.
correct. And I think you hit the nail on the head, because you see, obviously, human beings cannot be everywhere at all the time,
Correct.
right? And identifying this in a mature fashion and deploying technology to mitigate these risks away is the most prudent thing you can do. And
Correct.
obviously, with tools such as yours, it makes it so simple and intuitive, which definitely benefits your clients.
Correct. So I think majorly a prop trading firm or any big brokerage house, maybe I'll focus more on the trading firm right now because people would like to know more about the strategies and the techniques. So what I get a sense from your knowledge, what you are sharing is the key management over there is the risk management, right? The
Oh,
key
yes.
factor
That's
is
where
the
it starts. The very first thing I have to know before entering a trade or before giving money to a trader is how much can I lose, right?
correct,
Once that is defined, then we'll start looking at how much we can gain.
correct,
If it is so, I think another interesting thing that we do is while we have strategy level risk management, while we have desk level risk management, we also have firm level risk management, where we might notice that the individual desks are within their risk limits, but
correct,
because of a market bias or because of certain events, the firm itself is tilting on one side. In
correct.
which case, we run algorithms to hedge away those risks as well. So if we're too long, we'll short. If we're too short, we'll long. We'll buy cover, right? So algorithms are not only alpha generation machines; they are also risk mitigation machines, and
Definitely.
it is best if used in tandem.
Correct. So actually, this is a perspective. You actually nailed it. This is the perspective we are trying to change because in market there are many beliefs like that which state that algorithms are alpha generating machines or ये
Only.
चला लो पैसे ही पैसे है.
It's not that easy.
It's
If it was
not.
that easy, we'd all be sitting in Goa running black boxes out of co-location.
So this is coming from a person who is leading a prop firm. So everyone should take a note that it's not something if machines are doing the trades or if it's just that you start the algorithm, you don't have to manage. Yeah, the entry exits are more systematic. They are emotionless. They are out of human bias. The accuracy is higher. All that thing is some added benefit what you get out of algorithmic trading, but it doesn't guarantee profit. So if someone in the market comes to you and says that I'm giving you profit, I'm writing that on paper, it's a fraud. Don't even give your money for the subscription or don't even give your money for trading is a very separate ball game out of that. So I think risk management is the key. So Yuvraj, what are your risk management mantras wherein you can tell the audience how they can manage? So I'll tell you some examples wherein the client base of any retail mass starts from 30,000 bucks to somewhere around 20 lakhs. So that's the capital size wherein they are trying to manage or they are trying to replicate the strategies or they are trying to run the strategies in
I'm sorry I lost you there. 30? I just heard 30. I did not hear the
20,
units.
20 lakhs. So
Hmm.
30,000, it's the capital starts, the average capital starts from 30,000 bucks for a single lot. Maybe a retail trader is trading up to 20 lakhs, not higher than that. So this is a kind of retail category of audience normally what we have observed who come to the platform for algorithmic trading. So what are your key mantras wherein it will help users to manage risk? Like how do they incorporate that to manage their capital?
I think we've already touched on two of those mantras. One is definitely diversification. The best way to reduce your risk is to have diversified strategies. So if one loses, the other one gains. so that your losses are not. So obviously you do that at the cost of returns, but that's okay, right? Um, it's important to understand one thing, that the market will be open tomorrow. The market will be open the day after that. Maybe not tomorrow because it's holy, but
Yep.
the markets aren't running anywhere. It is much more important to remain solvent, remain liquid, and remain in the battlefield rather than being an ember and losing it all in one day, right? So diversification is one big mantra. The second one is bet sizing, uh, and the way we usually approach bet sizing is, as I told you, the first thing that I need to know is how much will I lose, right? So
Correct.
if I'm in a position that my maximum loss on a trade is 5%, right? So then I won't put in too much of money behind it because that's a very high loss, and I'm not in the market to lose money. The third risk. So all of these are risk management strategies from the front before even laying a single trade, right? The third mantra that we have is we very rigorously stress test every strategy that goes live. So if tomorrow we're living, for example, a technical indicator strategy, you can be sure that we have done our back test, we've done our stress tests, we have run them for 3 months on paper to make sure that there are no untoward scenarios. We have run the systems in mock to make sure that these systems don't malfunction. Only then will we allow a strategy to trade real money. Right. So these are the methods from the front. The methods from the back is, if you are an active trader, please understand that this is your job. If you're using algorithms, if you're an active trader, this is your job. You have no other work from 9 to 3:30, right? Because if you lose sight of what is going on, you will fail, and you will lose a lot of money. So please do not treat, and especially with algorithms, right? While I'm sure Trade Bulls has AlgoBulls has wonderful algorithms, machines can go wrong, right? Um, I remember one situation in lockdown when there was a tornado and all of our lines got cut. MTNL lines, Airtel lines, all of our lines got cut because of that tornado, right? So a lot of our, and this happened during market. So a lot of our traders didn't know what to do because they couldn't cut off their positions. So fortunately, my head of technology, having foreseen the situation, had a kill button installed at the co-location, which went ahead and killed not only all of our prop positions, all the clients' positions as well, because obviously any pending positions or any open intraday positions are risk, and we cut all of them off. So obviously think and plan for worst case scenarios as well. Now, if you want something a little bit more technical in nature, uh, if you're a high beta strategy, definitely understand that we are living in volatile times right now. Um, and as we all saw in a war scenario, even the front lines correct very aggressively. So in as much as that, it pays not to be complacent, and it pays to have stop losses in place to make sure that in an untoward scenario, in a spike or a flash crash, you are not the one left holding the pieces.
Correct. So as you rightly highlighted, like technology fails, and I also agree. So no technology is robust. There can be hundreds of things which could go wrong anytime. That doesn't mean that technology doesn't fail or algorithms don't fail. It just gives you an
Mm.
added advantage against the big systems which are competing against you. So there is
Mm.
a stat in the market, Yuvraj, which says that 95% of the traders are not profitable.
Mm.
So why? What's the reason? Why do you think they are not profitable? And what they should, what's your guidance on people? So there are many people who will be watching this video. They will be taking notes on this. That what they should incorporate in their journey. So one day they could achieve the alpha generating strategies. I know it's a tricky question and no, not a
No, there could not be a simpler question, right? So, um, number one, the raw material is time, not money. Give it enough time, you will make money. Number two is keep it as simple as possible. You hear of Renaissance Capital. generating 60% through some Jim Simmons machine learning. Keep it simple. Those are the things that make money. Uh, while algorithms help you narrow the moat between profitability and non-profitability is the strategy. So spend a lot of time massaging your strategy, ideating it, stress testing it, because that is where the alpha really is. Algorithms are tools used to generate and squeeze out that alpha. Uh, Spend time working on your strategy. Have strong risk management, have strong diversification, and everyone loses money at some point in life. The people who eventually earn and the people who eventually become wealthy are the ones who stick to it. And also, don't be greedy. Um, so, I'm not saying, okay, fine, let me rephrase that. Be greedy, but within reason. And also ensure that if you have one side of your investing that is greedy, definitely have one side of your investment that is not greedy. Right.
Correct.
So I temper all of my active day trading of all my boys with value investing, right? Because at the end of the day, I know that these are the pockets of value that are available in the market that will give me returns over a 2, 3, 5 year period,
Correct.
right? But that is my strategic hedge.
Correct. So you said very correctly that don't be greedy. I think it's like don't be
Be
greedy
moder-
for
be,
doing,
be moderately greedy.
but be moderately greedy, because if you are not greedy, you are not opportunist and you can't grab the opportunity.
Yeah, yeah.
Trading is kind of toughest job in all the professions, I believe, and you have to be greedy to learn at least, or to understand how the systems work or how this
And
market
to
works.
learn, yeah, yeah. So every morning I wake up, I look myself in the mirror and I remind myself that I know nothing, and that I'm the stupidest person in the market. Because the minute you start feeling like you know it all is the minute you start losing money. And not just me, my entire firm, all my traders, we are voraciously hungry for information, right?
Correct.
We keep reading, we keep learning, we keep experimenting, because that's the only way to really stay ahead of the curve. As you yourself know, Suraj, nothing works consistently forever. You have to keep updating, you have to keep tweaking, you have to keep modifying. So again, here's another piece of advice I can give to your listeners. Between 9 to 3:30, spend time reading, spend time improving your strategies, your platforms. But don't touch your strategy in the live market. You're not allowed to do that. The only thing that you're allowed to do between 9 to 3:30, if you're running an automated system, is turn it off if it's malfunctioning. Right? Other than that, you let your system do what your system is supposed to do. If there is a problem that you notice with it, fix it after 3:30. Right? Do not, for
Correct.
any reason other than gross malfunction, uh, kill your strategies in the middle of the market.
Correct.
Yeah.
So
So you are expected to have put in all of that thought, effort, time before turning the strategy on, and once
correct.
it's on, right? The only time you're allowed to touch it is after
Correct.
3:30. And in fact, in some shops, Suraj, you're only allowed to touch it on Friday evening. Between
Correct.
Monday to Friday, you're not allowed to touch it. So the people who maintain those strategies and algorithms don't work Monday to Friday. They only work Friday evening to Monday morning.
Correct. So what you said, Yuvraj, it made so much sense. So I just like to highlight, because the thoughts what you have resembles the things we have incorporated at AlgoBulls. So at AlgoBulls, we once a user is starting the strategy, so morning 9 he has to come to the systems and start the strategy. There is no other way. When it comes to the strategy, he's been asked about two things. That's risk management, his PNL and risk desired, and quantity. Nothing else, because
Hmm.
everything else is incorporated in the strategy.
Agreed.
And once he starts the strategy, there is no editable option. So
Hmm.
it started, nothing. You can't do anything after that, and there's only a stop button to just stop the execution and just close the strategy for the day. It will square off your positions and just turn off the algo for the day.
And
I
cancel the pending orders.
cancel all the pending orders. The completed orders are already executed. The stop losses are cancelled, and all that is done. So, so coming this from your point of view, I am really happy to know that you have a tremendous experience in algorithms. You have a tremendous experience in managing huge money. I know the amount or the quantum of money you are managing. And we are trying to bring that discipline in retail masses. I know that's difficult, and you have a thought in back of the mind that it's very
No,
challenging.
it starts somewhere, right? It is wonderful what you guys are trying to do. You're trying to remove the inefficiency out of the market, or at least out of the individual retail portfolios, which is wonderful.
Correct. So the question I asked you was certainly because of that, what we are trying to achieve, and I think the thoughts of both of our organizations are aligned. And the question was the same thing: why 95% people fail, or why there is such a huge stat or number behind that? It's all because of what we discussed in last 30 minutes or something. So it's because of the emotions, it's because of the human bias, the accuracy, the people are not using the systems, or inefficiencies in using the systems. Even though people are using the systems, they are continuously tweaking it. So not having belief. So I'm pretty sure everyone who is listening has at a certain point of their career got this point wherein their strategy faces a lot of drawdowns. So I'm pretty sure you must have also observed.
Oh
So people
yes.
change the strategy. The people don't trust the strategy and they keep tweaking. So what is the period, Yuvraj? Like, what do you suggest? What is the period people should at least monitor? I know it's different for different strategies, but just a overview wherein people should trust, or people should at least give that amount of time. And if that is not happening, after that people should change some method, or change the strategies, or uh, reform that strategy. What do you suggest?
So you said it right. There is no one size fits all sort of time frame,
Correct.
but definitely. So let's say, for example, if you have an intraday strategy and you lose money for 5 days, don't turn it off. Tweak it, make it better, but don't stop. If you lose money for 3 months, then yeah. If you have a long term strategy, right? Capture 2 cycles and see if you could, if you're beating the benchmark or if you're not losing money. um, Definitely capture enough cycles. So if your cycle is intra-minute, capture enough minutes. If your cycle is intraday, capture enough days. If your cycle is expiry to expiry, capture enough expiries. um, so you see, this is a double-edged sword.
Correct.
I cannot give you a one size fits all type of answer, but discipline, right? Time and discipline, you've got to give both of them. um, Before entering any strategy, you've obviously done your research, you've obviously done your homework and your back tests, and you know that, okay, fine, over the last 5 years of back tests, the maximum my strategy has lost is 4% in one day, for example. And then if that one day comes along where you've lost 8%, then obviously there's something grossly wrong with your back testing or your strategy, or something really bad has happened in the market,
Correct.
like Corona crash, or Ukraine, or demonetization, or surgical strike. So these type of black swan events must be ignored, right? Nothing works in that time unless luck. Only luck works in that time. Uh, or if you have a strategy that is built around black swan events, which will be active once every 2 3 years, but it'll make you a lot of money. Even that's a viable strategy,
Correct.
right? Not being in the market all the time, uh, being in the market having orders but no positions.
Correct.
So even that is actually a very, very viable strategy. I've seen a lot of people who simply trade that way. But again, right, greed comes into it, and instead of doing that for big black swan events, they start
Correct.
doing it every Thursday, right? Selling pairs of options that are very, very close to at the money, hoping that the market won't jitter too hard on the last day, which is, in my opinion, playing with fire. Because if it does, you've lost all your money, and some, not only your investment, but a lot of other money. So uh, you there's no one size fits all. You've done your research, you've done your homework, you've got your statistics. Make sure that your strategy is behaving within those parameters. If it stops behaving, tweak it. If it still doesn't behave, stop it.
Get it. Perfect. I think so. The strategies are comparatively easy. The indicators, any indicator you use, or any quant, any math which you use, is not that significant, or maybe it's significant, but your risk management or the tools what you are using are at most valuable, which can turn the game around your side. So what are the tools you are using, Yuvraj, for trading, and what do you I am pretty sure you have your own in-house tech for it, but just to give a overview for a retail trader, what are the tools they should have, or they should watch during taking their trading decisions?
Um, so the most important is Excel, right? I cannot stress to you how important Excel is. Everything is done on Excel before it is done in the real world. Um, Clean data is another tool that people usually discount. Having clean data is very very important because that forms the basis of your back testing. That's a very important tool. Um, studying is a great tool. I know that's not the answer. These aren't the answers that you're looking for. I'll get to them.
No, no, it's the answers. I can relate to it, and we were actually looking out. I don't want a name of a software, or I don't want that answer. That's hypothetical. Everyone knows that in the market. If you are a trader, you know that. I want the real answers.
Right. Definitely having clean data is important. Having educating yourself is important. Excel is very very important. A little bit of programming knowledge in this day and age is wonderful, right? So I've never actually learned Python before this, but I am trying to teach it to myself with all these wonderful online education courses that are available, and everything is available on YouTube.
Correct.
Um, in terms of tools, we use very, very strong risk management tools to manage the risk of a trade, to manage the risk of a trader, to manage the risk of a desk, and to manage the risk of the broker. Right? There are plethora of tools that we use in this. Some are provided by the exchange, some are proprietary, and some are the CTCL tools that are available to us. So, for example, Odin, Greek, all of these guys have wonderful risk management tools as well. Um, and the the simpler your tools are, the simpler your platforms are, and the simpler your strategy is, the longer it will live. Right? All of these fancy tools and fancy strategies have a certain life. Um, and definitely understand one thing: deploying a really, really, really fast server will give you poor results.
Correct.
Um, Having the best tools uh, does not guarantee the best returns. Having the best strategy guarantees the best returns.
Correct.
And more often than not, the best strategies are those that are simplest.
Correct. So I get it. I was really looking out for that answer, Yuvraj, because no one can understand the importance of data in nowadays. So it's available
Oh,
majorly free
they.
on all of major websites. But is that data clean? Because that's the base on which you are backtesting your strategy. And if that has some glitches, and you yourself know, we also know at AlgoBulls, because we are managing trillions of data points at every micro level, and it's so difficult to provide live data while trading, and clean live data while trading. It's very important. I think this is best answer what I was looking out for, because if people can understand the importance of data, they will understand the importance of backtesting.
And people usually discount the importance of clean data. I wonder
Correct.
why. It is the base. It is the rock upon which we build our churches, for sure.
Correct. And if that's rock solid, your strategy can't be moved. And if
Oh,
that's
it still can be
faulty,
moved. There are so many macro factors. But if that is, let's put it another way. If that is weak, I can guarantee you your strategy is weak.
correct, correct. To put in the better words, yeah, if the data is faulty, your strategy is
Is
definitely
faulty.
faulty.
Yeah, yes. So, but it's no guarantee that if your data is good, your strategy is good. But yeah, I guess you understand what is being said.
No, I completely get it. So, because of that, all these factors cumulatively, the trading is actually a difficult profession, and I I personally believe all the factors what you suggested are completely genuine and true. And people feel that this strategy is important, or any indicator is important, or any timing is important. It's not like that. The secret sauce is always the risk management, clean data, and this is actually given the least priority in the markets, and
And
hence
discipline.
discipline is at most important.
Hmm.
So summarizing all, putting all this together in a basket will give you profitable trading.
Oh
And
yes.
this is something what is missing out in the markets. And
and
I
and and now you see there's no real excuse to be under equipped or indisciplined, because there are such wonderful platforms like yours that are available to everyone, right?
correct,
So realistically there's no reason why someone should not be able to use the best tools.
correct. you you hit the bullseye, I think, because all these factors are very underrated, and no one highlights or thinks about such factors wherein it can affect the profitability of the trader. And if at all people take this advice, I personally feel that that ratio will go completely on the lower side. I always suggest that we are on a mission or a vision to decrease that ratio. I want that more and more retail traders or the retail masses, whoever are using my platform or not, that's a second question, but they become profitable. Because if you get liquidity, if you get profitability out of, so profitability is the key for liquidity, right? Correct me if I'm wrong. Wherein
Yeah.
people are profitable, they will be adding more and more money, and that's how the markets will improve.
Or a rich father.
uh, yeah, that's also the point. But I think let's focus on a bigger audience wherein
No,
we can
I
provide them
agree. No,
such tools.
I was actually corroborating what you said, right?
Correct,
So either you have to have a rich father or you have to make your own money,
correct,
right? So, and if you have to make your own money, um, so my grandfather always used to tell me, and it makes a lot more sense in Gujarati than it does in English, but for your listeners, I'll translate it. Is that when your body earns, you will fill your stomach, but when your money earns, you will get wealthy, right? So the objective is to make your money earn you money, right? And the only way to do that is to treat it obviously like your, it's not to treat it like your first job, it is your first job.
correct,
uh, to be very very disciplined and professional about it, and to understand that any mistakes that you make in this are your mistakes, and any victories are your victories,
correct.
right? To own your strategies, to own the execution, and to try to be as professional as holistic about it as possible.
Correct.
Now, whether that's clean data or whether that's using AlgoBulls software, right? Those are tools, right? It starts off with a mindset.
Exactly. So we want to hear that in Gujarati also, because that's something
धन कमाए तो पेट भराए, धन कमाए तो ढकला था.
more audience will relate to this because it's more effective in Gujarati.
Oh yeah, there's a reason it's called the Lal Street.
Definitely, definitely. And you are one of the ruler. So Gujaratis are
Small,
dominating.
small player.
No,
No, apparently the IITians are dominating at the moment.
correct. Tech is definitely the next, big thing in markets, and tech
No,
has
it
always
isn't.
been the integral
It
part
is
of
not the next big thing. It is always been the big thing.
always big thing.
Starting in
Correct,
1993, right, when the markets moved from the outcry system to
correct,
the bolts, right, to the trading terminals, a huge section of the old rulers of the market went out of business. Why?
correct,
Because they just couldn't keep up. So tech
correct.
is not the new thing. Tech is the only thing that remains unchanged.
I
If there is
completely.
any permanence in our market, it is technology. And whoever has the best technology, whoever has, and even best technology doesn't mean the latest operating system.
Correct.
It means whoever has the most friendly policy towards technology, uh, the ability to use the tools most effectively will win. I'm convinced of this.
Correct. Perfect. So I think tech and trading goes a long way,
Oh
and
yes, they're
you
synonymous.
you can't imagine yourself in a career like that where you don't have the backbone. That's the tech part.
Agreed.
That's why we are solving the major part over here.
The next unicorn.
Thank you for saying that on screen. Let's see, sir. But the main vision or the focus would be, to make a retail traders journey more comfortable and bring down that profitability, the loss making traders percentage to make more retailers profitable, and to provide the sophisticated algorithms or the tools which, like big firms like yours have to the retail masses. That's something what, you know help us to provide the solution to the retail masses. Let's see.
Wonderful.
um, Anything you would like to highlight or share, the last notes you would like to advise the retailers on, how to trade or anything, your last notes? It's been a wonderful session, and I think you have, shed some light on each and every topic what we asked. We really thank you for that. So
It
any
is it
last?
is my pleasure. So you don't need to thank me. I should thank you for providing me this wonderful platform. Uh, yeah. So keep it really simple. Use the tools that are available to you, um, and be disciplined. So I don't know where I read this. People usually overestimate what can be achieved within a month and significantly underestimate what can be achieved over a decade.
Correct.
So I think we did touch on this topic in our conversation. The raw material to this is time and discipline, not money. So just stick to it. And compounding is genuinely the eighth wonder of the world. So don't look to make 60% every year. Look to
Correct.
make 15% every year, and the way your wealth will multiply
Correct.
is ridiculous. So the example I love using is 100 rupees uh, invested at 14% over 30 years amounts to 5,091 rupees. So it's magical. Uh,
Correct.
Now, obviously, people aren't going to invest 100. As you said, it's going to be 10,000. So you just add that many more zeros. Uh, but definitely be disciplined. Definitely use the best tools available to you, and stick it out. It's a wonderful place to be.
Correct. And markets are where you make money, right? It's only the place where you can double or compound your money at a speed if you are disciplined, of course.
It's definitely the most democratic platform.
Correct.
Barely any barriers to entry, starting with smaller tickets. So today, for me to set up a plant would cost me obscene amounts of money.
Correct.
But to buy the stock of a multinational company that already has that plant
Correct.
and have those the same returns replicated, in fact, even better, is much cheaper. It's
Correct.
more democratized.
Plus less maintenance. And
I agree, and the ability to exit, right? Uh, it's very important to be able to identify when you've made a mistake. Put your hands up and say, "I'm sorry, I made a mistake. I
correct.
need to exit."
Take the ownership of your profits or the
Oh
losses.
yeah, oh yeah, oh yeah. And it's not a sin to make losses. Everyone makes losses.
Correct.
It's a sin not to learn from them.
Correct. 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 Fantastic, Yuvraj. Fantastic. I think, if people really watch this and they take some notes out of it, I think it's going to be a really value add for them. And this is all the secret sauce we wanted, for people to understand. And this is what experience speak, Yuvraj. And this is not something that comes from, if you would have started yesterday, our conversation would have been completely on a different track. But from the ups and downs you have faced, from the level when it was started, and where you have taken your firm, or the, the all the businesses you hold, is it's commendable. And that all comes from the experience or the losses or the ownership what you have taken from the journey. And thank you
You're
so
too
much.
kind.
No, but
Thank you.
that's really valuable.
Thank you so much for having me.
Thank you so much for sharing all that and summarizing all that. It's really a wonderful thing if people take away even little bit out of it, I am pretty sure people are, bound to generate some alpha or benefit out of it. It's really going to cut their learning curve to a great extent.
Thank you, Suraj.
Yes, thank you so much, Yuvraj, for joining us. And it's been a great session. We are looking out for session two. So basically, people can shoot the questions and they will be asking you for what you told, right? Maybe in Gujarati, the quotes you told, people will definitely ask you questions. So you have to be with us for the round two.
Sure. Anytime. Thank you so much.
Thank you so much, Yuvraj.
Sure.